With home and auto insurance premiums on the rise, what can you do? Is there anything to help keep your premium low or from rising as much as possible? I've got 5 tips, that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. This is the most bizarre home and auto insurance market I've certainly ever lived through. Likely you have as well. I've shared recently on, if you're a daily watcher of our videos and our channel here, that this is the most complicated insurance market maybe ever. And why is that? It's not just normal inflation. Certainly that is playing a role. But following COVID, there were shortages of chips and windshields and other parts. And therefore, when people had a claim on a vehicle or to repair a house or something like that, there were a shortage of people and a shortage of supplies to actually repair those vehicles or repair the house or replace them, right? And so that shortage has pushed prices significantly higher for those things in addition and on top of inflation. So it's sort of inflation factors times 2. And further, we've had an extraordinary rise in the number of events, number of claims, number of natural disasters or incidents that would cause your car to be damaged or car to need to be replaced or your home to be damaged, home replaced, that sort of thing. And so when you mix it all together, insurance companies are struggling and many have gone bankrupt. Others have said, we can't do this anymore and have been bought out by larger companies. A lot of insurance companies that have said, we're no longer offering insurance, new insurance in this area, Florida or California or whatever. We are actually no longer offering insurance to these types of people if they meet certain demographics. And so it's harder to get insurance. It's more expensive. Prices are on the rise. How long will it take for things to settle down? Yeah, this is definitely not the first domino to fall after COVID and inflation and all of that. It's one of the later dominoes, and it's still sorting itself out. It's very possible we could be in this predicament for a while. So is there anything that you can do? Anything that you can do to either bring your costs down or help your costs, your premiums, your home and auto insurance premiums from rising as rapidly? I'm going to share my 5 favorite tips with you right now, but it all centers around one big tip, and that is you've got to be working with an independent insurance agent. You do. With these sorts of things, some of it I'll get into, you're going to need some advice and some work collaborating with an expert who cares for you and represents you as opposed to represents an insurance company. You're not going to do that if you're just getting your insurance online. You're not going to do that if you're just working with an insurance company that the only thing that they can offer is their own insurance, because really they have a position where they're representing their own company as opposed to representing you. An independent insurance agent is someone that is working with multiple insurance companies and therefore can better represent and truly represent you to say, well, with this insurance company, they've priced themselves out of this, but we can look over here and this is a better option for you. And so above all else, the only thing you hear, how can I keep my insurance premiums from going up as much? No one's truly insulated from this completely, but how can I keep my insurance rates from going up as much, or what can I do about it? I mean, step 1 is make sure you're working with your independent insurance agent. Now, beyond that, what are some of the things that they're going to help you with, or what are some of the things that you can do? Number 1, evaluate your deductibles. Evaluate your deductibles. So if it's not clear, I'll draw the distinction. The lower your deductible, that means, well, when you have a claim, the insurance is you're going to have to pay less, and the insurance company is going to have to step in sooner. They're going to pay more. We would all want that. We would all want a 0 deductible. As soon as I have a claim, I don't pay anything out of pocket. I want the insurance company to cover it. But if you do that, you're going to have to pay more premium. It's going to cost you more. Versus if you say, well, no, I'll have a little bit higher deductible. Then when you have a claim, you have to bear more of the cost up front, and then the insurance company steps in. But the trade-off with that is your insurance premium is lower. So it's sort of a teeter-totter. Well, here's the thing. With this insurance market being as challenging as it is right now, the more claims that you submit, the more your premium's going to go up, and the greater you are at risk of maybe losing coverage altogether. Therefore, if you're not going to be submitting small claims because you don't want those blemishes on your record, why have a small deductible? You're paying more in your premium, but actually not getting any benefit, because if you do have a small deductible, or if you do have a small claim, you're going to pay it out of pocket versus submitting it to your insurance, pay your little tiny deductible, and have the insurance company pay a little bit beyond that. So working with your independent agent, take a look and say, well, currently at a $250 deductible, if I move to $500, what does that do to my premium? Or if I move to $1,000, what does that do to my premium? This is one of the reasons why we say your home and auto insurance decisions, these are a comprehensive financial planning decision, because what influences this is, well, do you have a fully funded emergency fund? How strong is your financial situation? Can you afford a higher deductible and recoup those savings or receive those savings by lower premiums? So work with your certified financial planner on that, but work with your independent insurance agent to evaluate your deductibles, see if you can find some savings there. Second, bundle. And I can't say that without a smile on my face, because hilarious commercials about bundling and the benefits of having your home and auto insurance with the same company. And despite all the humor there, and as much as it's promoted on commercials, there is a benefit to that. Actuarially or mathematically, these insurance companies have looked and they've said, well, when we have someone's both their home and auto, or if they have multiple cars, or if they've got an umbrella as well, or if they've got some other toys, when we are insuring all of that, actually, it's a better cost-benefit scenario for the insurance company, and therefore, they pass along some of those benefits, some of those cost savings to you. You can get a discount for having both your home and your auto insurance with the same company. Sometimes this doesn't make sense to do. Many times it does, but there again, I'm going to come back to working with an independent insurance agent. You're going to want them to prove it to you. Oh, it's worth it. You need to have them together. Or, oh, you're in the rare situation where your house should be with this company and your auto should be with this other company. They're going to help guide you through that. Otherwise, just a sort of blanket scenario, I would assume it's going to be cheaper for you to have both your home and auto and all your toys and everything insured through the same company. That can help keep your premiums low. Third, again, working with your independent insurance agent, go on a discount hunt. Go on a discount hunt, okay? And I'll share a couple of my favorite discounts with you, but each insurance company has their own sort of cocktail of discounts that they'll offer. And yes, many of them, if you get 2 or 3 discounts, you cap out. You can't get any more than that. The maximum discount is X, but you want to go on that discount hunt with your insurance agent. And right now, with everything changing in insurance, some insurance companies might say, yeah, we're no longer offering this discount. But they might also say, well, we're offering this new discount. Okay, so go on a discount hunt with your insurance agent, your independent insurance agent. Now, a few of my favorite discounts to be aware of: good driver. Okay, good driver discount. You want to be aware of, does your company offer that? And do you qualify? Are you getting it? That sort of thing. Why is that my favorite? Because being a good driver also keeps your rates down as well. If you get in an accident, get a speeding ticket, that sort of thing, your rates are going to go up. So good driver discount, I love that. Second, good student discount. If you have any youthful drivers and they're getting good grades, that's something you'll just want to show you their report card, and then that can help reduce your premiums as well. And then finally, the paid in full discount. Paid in full discount. Why would I like this one? You get a discount by many companies if you pay the entire year's premium or the entire term's premium all at once. Why do they give you a discount for this? Because they get the cash up front, so it improves their cash flow, and it's less processing time because you're not paying every month or every quarter or whatever it is. But why do we love it as financial advisors? Again, if you have a strong present financial position. So that's the first area of the 6 areas of your financial life. If you have a stable and strong financial position, then you could save up in advance for your health insurance, for your auto insurance by saving up into your delayed spending account, bucket number 2, and then pay it in full and get that 10% or 5% or whatever the discount is. Speaking of discounts, 4th tip as a way to keep your insurance premiums from going up as much or to even help them go down is, they have a different name for it, but the driving tracker. the driving tracker. And I know as soon as you understand what I'm talking about here, you're going to probably roll your eyes or say, I'm not comfortable with that, whatever. But a long time ago, they introduced, I don't know, 10 years ago maybe, introduced this concept where you could get a discount if you let your insurance company monitor your driving habits for a certain period of time. So they gave you this little chip, you plugged it into your dash, and for 30 days or whatever, you let the insurance company monitor your driving. Well, there's no longer a chip that you plug in. You just give authorization through your phone. As long as you have your phone on you, they can monitor all this. Well, how can they monitor it? GPS. They know where you are, and therefore they know if you just hard stopped at a stoplight or rolled through that stop sign or went too fast on that right turn, that sort of thing. They're able to monitor all that. Makes me uncomfortable, makes you uncomfortable, I'm sure. I'm saying they're probably doing that anyway, or if it's not your insurance company, it's someone else. So privacy it's invaded, okay? But the trade-off with this is normally when you sign up for these, the insurance company says, listen, your premiums cannot go up. They won't go up. So if we find out that all you're doing is speeding, you never stop at a stop sign, we're not gonna raise your rates. Maybe they should, but they won't. Okay, the worst that can happen is your rates stay the same, or you automatically get a small discount by doing this, but you could get a much larger discount if you prove that you're a better driver than the average driver. Therefore, my fourth favorite discount right now to help, or fourth favorite way to help you keep your premiums from going up as much, maybe work with your independent insurance agent about that driving track or driving tracker. And then finally, this is just good overall financial advice, whether you're looking and focusing on your home and auto insurance or not. But fifth way to help keep your insurance rates from going up too much is by improving your credit score. Can improve your insurance score and help keep your home and auto insurance rates from going up quite as much. Many people aren't aware of this or don't believe it or really don't understand it, but your credit score is your financial reputation. Whether you like it or not, it's your financial reputation. Are you trustworthy financially? If you've got a bunch of credit, do you abuse it? Do you borrow money and not pay it back? That'd be a bad reputation, that'd be bad credit. If you borrow money or you have lots of borrowing that you could do, but you don't do it that much, and anytime you do, you pay it back, that's a good reputation. That's a good credit. And if you have no credit, that's just the same as saying you have bad credit. You haven't proven that you're trustworthy yet. That same thing applies to an insurance score. Part of your credit score is baked into what many companies call an insurance score. They have found that if you have a poor credit score, you actually tend to be a more dangerous driver, have more claims, to be more expensive to insure. There's other factors as well that go into your insurance score, but improving your overall credit score can help your insurance score stay low or be low, and can help your rates from keep them either at the same level or not going up as much as they otherwise would. So I hope those 5 suggestions help you. The 6th suggestion, or the biggest, the overarching, the umbrella, is work with your independent insurance agent and have that team help guide you through these suggestions and any others to help you navigate this challenging home and auto insurance time. So work with your CFP on that and your independent insurance agent. If you don't have either one of those on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. Right there you have it. Go out and take your next wise step in your financial life.